All right, Steve, nice to have you on, man.
Nice to be here.
So we connected on social, and from my recollection, I think you did something with was it VC work you're doing?
Yeah. So a couple different places. So I'm raising a little venture fund in Connecticut. It's a passion project for us, and raising $100 million for early stage fintech startups. So it's a feel good one. It's a very big ecosystem place. A lot of the great people here in the state are all rooting for our success. It's a privately run fund. So every profit motive to kind of get investment returns, but that's an outcome. Really, where the power of that is going to be trying to contribute to the ecosystem and getting things running.
Gotcha. Are you from Connecticut then? Is that?
I do live in Connecticut. Originally from the state of Michigan, but Connecticut's my home. So all three of my kids are here, wife, whole community. So we're pretty plugged in.
Okay, right on.
Yeah, and the other half of my life is a company called Right Pedal, which is in Miami. So we do venture in fintech. So we have a startup. It's about to launch and become public. So that's in stealth, and then we do advisory. We help fintechs sell and develop their product and go to market.
Oh, very cool. Nice. I back in early February, I had an opportunity to go down to Phoenix for the Finex Tech Acquire or Be Acquired Bank Director Conference. It was combined.
Okay.
That was kind of fun, just to kind of get like different perspectives from community bankers and stuff like that.
Yeah, it's an interesting time to be in banking, because of technology has advanced so much, and then DeFi is around the corner. You have a lot of neobanks trying to hit underdeveloped markets like the unbanked or underbanked, right? So I think it's a really interesting time for the world right now.
Yeah, certainly some projects are trying. There's the Celsius debacle. And that's I don't know if you know much about that with Chapter 11 and.
Yeah, no. I've been following Celsius. Yeah, it's unfortunate that so much air has gone out of the tires of the blockchain world, only because of crypto. I actually think that, talking to some of the network that we have in the blockchain world, that the culling out of all the projects may reveal some very strong ones. So what we may see is very clear indication on the 100 or 150 so projects that are really viable. And so I think for investors and for customers, consumers, that will be good, that they can start to focus their attention, and those projects, obviously, because of the nature of blockchain, need their network to grow. So that'll be a positive outcome.
Yeah, you're seeing some that still have a strong team. And I'm looking at different projects, for example, and I don't have any sort of experience like you do, but I'll look at team, traction, technology, and how good is that team, and how good is the community, because with traction you have to have good community. So
Yeah.
if there's not some strong community built behind it, or if there's a community and a mistake is made and a project kind of goes quiet, then it's worrisome. But you got to get those good teams.
Yeah, the team needs to be there. And I think as we start to see like some traditional investors enter into the blockchain world, there's a contextual dissonance that they're having. They'd like to come in and invest in companies and then own big percentages of the equity, but in the blockchain world, it doesn't work that way. I think Vitalik and Ethereum, I think he kept less than 1% of the total tokens that are out there, and he pushed everything out to the community, and it blew up. And so he became wealthy, but on fraction of a percent. And that's a different way of thinking, right? Because the network in the community is much more important. Building the rails is much more important to the community. And I think that ethos is great. Um, you
I was
know,
gonna say you probably see a very new perspective being in this type of world of blockchain, Web3, fintech versus just other type of venture capital, where the ethos might be a bit different with other venture capital, where in this it's like a bit more distributed and democratized in terms of who can own it. And
yeah, it is democratized, and it's much more community oriented. I had a company that I know in the blockchain world that was trying to build their own rails. And the Polygon guys, I'm not, and I don't work for Polygon. I don't hold any Polygon, but this is just a story heard. Polygon guys spent a lot of time with them for free and got their blockchain up and running in 3 months. Otherwise, it would have taken them a year, and they did it for free because they just want more people in the community to be successful. So that is a very strange thing for people who grew up in business for the last 50 years to kind of understand. Why would you do that? Why wouldn't you charge money for helping these guys? And so that's where I think the difference in the way people think in going forward and into the future is really going to start to separate good investors from older investors.
yeah, you have lots of really cool people that join a community and they bring up the problems in a Discord chat or something, or maybe a hack goes down, like the multi-chain uh, hack, which is a smaller one. It was an exploit that I fell victim to. And all these projects banded together, including Gemini and Tether, and to hack back those
Yeah,
funds for users. And they got like 50% of the funds back or something. But I think that I lost like 27 ETH, but I got 9 of them back.
yeah.
And I'm like, oh my gosh, like that's cool that there was an actual community effort to try to.
It's really interesting as self-policing that way. I mean, it seems to lean heavily in terms of the community towards the positive, right? So it's very team oriented kind of effort. Like there's no like rewards or like gold stars for individual performers. They rather people like working in these teams for common vision, common goals, and I love the fact that when the team wins, everybody wins, right? If anybody loses, they feel like the team didn't really do well, so they all really try and help each other. But at the same way, if you don't really hold up your end of the bargain, the team self-polices you, and you can get kicked out of groups. But in the same way that you got your value back, I think that's great. I think that's great.
Well, the DAO voting mechanisms, those have pros and cons, and I'm trying to think back even to was it Sushi Swap? I can't remember if it was one of the heads of Sushi Swap that wanted to raise to pay himself more.
Mm-hmm.
And I think the community was just like, no,
Yeah. Yeah.
yeah, which is fine, the person that wanted to raise, I'm sure you went on to other opportunities that were really good,
Yeah.
where his ethos would mesh better. But it also kind of shows like the community flag of how they want to govern themselves in these
Yeah.
new projects. So that's interesting. So with fintech and startups, do any of these projects have somewhere in the roadmap that they'll ever go DAO, or would they stay like in a tight board type of uh, structure? Or like, what are you thinking is going to be the future of fintech startups?
Well, I think most of them that I see right now that are going through their advanced stages, Series A, Series B, are all traditional. They own most of the stack, the infrastructure. But you do have some futurists planted on some teams that are looking forward at things like DAO. In fact, that's a conversation that we have within our startup, both from a community aspect on the customer side, but also on the development side. So, the traditional way of looking at, how do you hire people, salary benefits is a very heavy way to bring people on, right? There's a lot of cost that comes into recruiting and training and retaining and then incenting and so on. And then the other side is DAO, right? Where you can get people together in a community where if you can give them a common vision and a goal and give them a award system and make them feel special, they don't have to be employees. Right. So somewhere between, the traditional and the future is probably where we're going to start to see some of the hybrids come up. Bug bounties, right? Though that's a example of just touching the idea. It's not a full DAO, but it's like I'm going to pay you to come in and correct this, but I don't have to hire you to fix my code.
Mhm.
And so you do have to look at the way that people are engaging in the world. And, thankfully, we have a whole generation, 15 to 25, probably that's probably a rough way of looking at the world. But if you look at the way that they're engaging with the world, you can kind of start to fast forward and say, well, in 10 or 20 years, they're going to be the 30 to 40-year-olds, the core of the world's economy. And the way that they want to engage the world is the way the products and services need to be built. They're skipping bank accounts, right? Their values in wallets. They're using NFTs to get into clubs and get experiences. And so it's early. It's very early. We're like literally in day zero of the way that they're engaging the world. But if you're smart and you watch them, you'll understand that they're the consumers and the customers of the core. So by the time, a VC investment in a startup comes to market, the average exit for these guys is 7 to 11 years. So you're talking about the whole cadre of consumers coming up and telling us now how they're engaging the world with their feet, right? So they just do it in communities. That's the way that I think that people should start to look at design for the future.
Yeah, there's definitely some creative, like community members, even in terms of like creative. You were talking about bug bounties, creative reward structures and things for bug bounties, or the people that don't fit in the box of the bug bounty that'll hack a protocol or hold it hostage for 24 hours and then just say, here's all your stuff.
Yeah,
I'm keeping,
yeah.
whatever. And it's like, it's kind of,
That one doesn't feel as good, does it?
no, but I don't, it's just different. I mean, you wouldn't see someone in the traditional world, steal money from a company, and just kind of hold it,
Yeah.
without the feds coming in or whoever, or if it's like a country, IMF coming in and saying, hey, we're going to freeze all of your funds.
Yeah.
Type of thing.
But that just shows that there's still a lot of work, between layer 1 and layer 2. There's a lot of tax, on that. The tax surface is quite big, and so you can get some very smart people to attack security on some networks and still get in. But we have a ton of people around the world, millions, trying to work on that problem and shut it down and get us to that level. That story about the kid up in Toronto who hacked in, and all he did was tell the program to do what it was supposed to do, and he extracted a lot of value. I think he's in a lot of trouble, but he basically knew a lot more about the algorithm than most, and just got it to do what it was meant to do.
Yeah, with justification of code is law. Well, yeah, yes and no. Too much gray for someone to just make the claim of code is law. There's so much gray.
Yeah, I think the morals and ethics are definitely something that overlaying things like blockchain and artificial intelligence. That's a very fascinating thing to discuss. I was lucky enough to take a course up at MIT where they're talking about ethics and morals and in artificial intelligence, and so that's an interesting topic that most people don't think about. But the example they gave was, okay, so you have an autonomous car, you're in it, and you have two scenarios. There's a lady in a pushing a baby buggy in the middle of an intersection that she came out too fast, about to hit. There's a crowd of people on the right, so if you turn right, you'll plow into the crowd of people, and then there's a cliff on the left, so you'll kill the driver if you go left. What does a computer actually do, right? Artificial intelligence would say, you know what, don't kill the driver, because they'll probably program don't kill the driver. And then they'll look at a crowd versus two people and say, do some sort of calculation, say two people's less, but is that the right decision? Right.
Yeah.
And the hard part of that, the collision with commercial, is this: nobody's going to buy a car that's programmed to kill the driver first. Right?
Yeah.
Oh yeah. So if you're in this situation, it's going to kill you first. You'd want to buy a car that killed someone else first, but that's the moral dilemma, the ethical dilemma. So it's really fascinating, that space.
It's like, well, we're gonna plug in the equality code in here on the update. Oh, no, don't update, don't up.
Yeah, exactly. You're like, oh shit, what do I do? Yeah. It's fascinating. So I think code is law has to include some human part of it, because we're human after all. We're the code, and machines are only supposed to be there to enhance our existence and our experience on this planet, not replace us, right? So they still have to emulate some of the human qualities: intent, morals, ethics, right? Values, in a way. So there needs to be code. I don't know if you call it code law, but there needs to be code boundaries that people won't want to cross.
Yeah, it has to align. There just definitely has to be alignment there for what the consumer wants. Ultimately, like you're saying, no driver is going to want to buy a car where it doesn't put their safety first.
Yeah, but you don't want. Yeah, but nobody on the street is going to want to have cars sold that are going to kill them first. So it's an interesting challenge.
Maybe it's a program of how would the driver react? How would this particular driver, given their personality, what they got going on in life, how would they react? Because eventually your avatar AI will be an extension of you. Right. My wife and I were just talking about this, like, having an avatar in the metaverse, for example. And your avatar has been learning through AI what your personality traits are, how you react. It'll take all of your bio feedback and put that into your avatar. And eventually the AI will be able to be indistinguishable personality wise of your personality. It'll talk like you. It can look like you with, the Real Engine 5 technology too. And I said, if a loved one is lost, you could visit that person in whatever metaverse realm you want. And have a conversation. And that person could even be, your 30-year-old self. It could be, your younger, even your older self. A relative that's passed on or something. So
you see a lot of movies and TV shows starting to explore that storyline. I remember, like, when I was a kid, everybody was doing time travel. So this is like when Doctor Who was in the TARDIS and he was going back and forth, and Back to the Future, and all those movies that's just started to figure out these weird paradoxes that might happen. But now it's in the metaverse. Do I control my Ready Player One? It's just an extension of who I am. It's just like it may look different, but it is actually me driving it, versus some of the other ones I saw. I forgot the name of the one where people could basically take you over. Like the human being became the metaverse, and the real people were kind of locked in their homes. And so people could actually just take over the character in real life.
Oh.
So you did a reverse.
Yeah, cool storylines. I know we didn't put too much time on the clock, but I did want to ask you, so with where we're headed right now in the market, some people think we're headed for a long-term bear market. What are you most focused on, and what do you see coming out of this, let's say in the next 3 years?
Uh, Early stage. I think early stage hasn't been affected. I think that the flows of dry powder still into that space are good. If you think about a recovery, I mean, most people think they were coming into a soft landing. Um, the equity markets have certainly come down. The technology sectors got pounded hard. But if you think about the way you invest and put your money, a lot of people exited. So now they have a bunch of cash on the side. You can't really go to bonds or treasuries right now because they're not doing that well. So, and it looks like the real estate market's starting to cool because rates are up and prices are starting to come down. For us, early stage startups are still very vibrant. There's no question about the valuation because they're starting, right? The valuation comes later in the price rounds. And if you think about how long it takes to get MVP into market, it's like a 2 or 3 year process. It's a journey. So in 2 or 3 years, you were probably recovered. So then if you put your money in an early stage startup, it's going to be developing. And then when the economy or the world starts to recover again, they're going to be hitting it, right? Other companies that have had to like extend their money to cover a 30-month burn, right, have slowed their growth. That doesn't exist in early stage startups. So I still think that there's a lot of opportunity there across all sectors, right? Because it's the same kind of market dynamic. You're going to develop anyways. So it doesn't matter what's happening in the economy because you're not really in it for customer acquisition or profitability. You're early stage. So I think there's still lots of good opportunities there, and a lot of people with great ideas that just need help. You know, writing it down, figuring out product market fit. All the VC buzzwords, and get it up and running.
So, last question. If let's say you were giving some advice to yourself 10 years ago. So you're talking to your 10 years ago, you're talking to yourself and you want to give yourself some advice.
Besides buying Bitcoin, right?
Yeah, sure. Besides buying Bitcoin,
Buy
but
Bitcoin.
let's say maybe within the realm that you're in now, but like what advice would you give yourself?
Um, I would say that, I started very early. I started a company in 2012 and I had an exit. So 10 years ago, I was in that mode. I would just say, keep going. Don't get discouraged. And there is no such thing as a silly idea. I would say take more risk. Because that's the only way that you can uncover ideas and talk to lots of people. I mean, the one thing I love about my life right now is I get to talk to lots of people. And I love talking to people because I always learn something from everyone. I learn from you during this conversation, and I always incorporate that. So all the answers that I'm giving you are probably not any of them mine, right? They're the community of like talking heads that have been coming into Steve Shyn's head, and I'm just like collating it for you in a stream of consciousness.
I like it. Well, we will stream this consciousness at some point. So keep going. Don't get discouraged. Take more risk. Talk to lots of people.
Yeah, talk to lots of people. I mean, it's great. I mean, the way the world's working today, no one can do it by themselves. The fintech is exactly like that. We know that a fintech that tries to do everything will fail because it's too much work. But you have the advantage today of technology tools and the speed to market is there, and people are solving different things. So if you're in a building a lending platform as an example, why would you build KYC? so many people have done KYC, know your customer. So just partner with them. Just build your APIs, be open, and build that in. Also, customers like to use what they use, right? It's like very individual. You like hoodies, I like polo shirts. We're both probably wearing shorts. Don't know. I don't want to assume. But we like to have our own thing, and in design and in infrastructure and platforms is the same way. So it's the whole open banking and kind of giving people the option. I want to use this settlement provider. I want to use this treasury platform. I want to use just this GL. I want to use these APIs or UIs to go out into the market. If you build the core, lots of people built all the other stuff. So all you have to do is like build the APIs and interact with them, and all of a sudden your product looks great. And you haven't really done that much work.
Yeah. You can put your blocks on different foundations and just keep building with different blocks.
No, exactly.
It's been a pleasure, Steve. Thanks for coming on, man.
All right, Ryan. Have a good one. It's good talking to you.
Take care.